The W-2 day job withholds taxes on every paycheck. The side practice does not. That single mismatch is what produces April surprises for almost every coach building a practice on the side. And the side practice map is built specifically to close the gap before it produces the surprise. 3 divergences from the default map, all in service of the same goal, making sure the tax withheld over the year is at least as much as the tax owed at the year-end filing, even though your income is now arriving from 2 different sources with completely different withholding behavior. The gap shows up in April with a number you didn't budget for. Day job W-2 income runs through withholding all year. Federal income tax, state income tax, Social Security, Medicare, all coming out before the paycheck hits your account. Side practice income arrives gross, no withholding. The full tax liability on that income lands at tax time. If the day job withholding was set, assuming the day job is your only income, the tax on the side practice income is added on top with nothing prepaid against it. The result is a tax bill that wasn't budgeted and an underpayment penalty on top. 3 divergences from the default map address the gap in different ways. First, the W-4 adjustment at the day job, promoted to step 5 in the side practice map and drawing from module 18.6, which is the cleaner mechanism for most side practice coaches. Second, mid-year timing as a new step 6, which changes the safe harbor math when the side practice starts partway through the year instead of at year start. Third, a more conservative entity decision modifying step 7, defaulting to single-member LLC at typical side practice income levels and deferring the S-Corp question until module 11.3 says the math actually pays off. 2 different mechanisms cover the side practice tax exposure. The W-4 adjustment at the day job sits inside the existing W-2 withholding machinery. One form filed once. The paycheck shrinks. The IRS gets paid throughout the year through the existing rails. Quarterly estimated payments are a separate stream. 4 payments per year on April 15th, June 15th, September 15th, January 15th. The day job paycheck stays whole. You write 4 checks to the IRS on a schedule. Both work. The trade-off is between cash flow shape and number of deadlines, and the right answer depends on which one is easier for you to actually do. Most side practice coaches end up choosing the W-4 adjustment. The reason is simplicity. One form gets filed with the day job HR and stays in effect until you adjust it again. The withholding happens automatically with every paycheck. No quarterly deadlines to track. No 4 checks per year to remember to write. The trade-off you make consciously is the take-home from the day job. Adjusting the W-4 to cover $4,000 of extra annual withholding takes about $330 per month out of your day job paycheck. That's the cash flow hit you accept in exchange for not managing 4 payment deadlines in a year. Mid-year timing changes the math because the safe harbor calculation is different. The IRS underpayment penalty is calibrated against full-year withholding and full-year income. Start a side practice mid-year, and you're working with partial year W-2 withholding from January through the start date, plus partial year W-2 withholding from start date through year end, plus partial year self-employment income from start date through year end. The safe harbor math is in module 18.6 with a worksheet that walks the partial year calculation. Don't assume the full year safe harbor numbers apply when you started mid-year. They almost certainly don't. S-Corp election rarely pays at side practice income levels. The savings on Social Security and Medicare tax from electing S-Corp come from the portion of income above reasonable salary, which gets paid out as a distribution instead of as wages. At 30 to 50,000 of side practice income, reasonable salary is most or all of it, which leaves little distribution and small tax savings. The complexity drag on the other side is real. Payroll has to run, a corporate return has to be filed, separate books have to be maintained, default to single-member LLC at side practice levels. Revisit the S-Corp question when side practice income crosses 80,000. Module 11.3 runs the actual math. Here's an example so the numbers feel concrete. A coach earning $120,000 from a day job, $20,000 from a side coaching practice in year 1, files a single-member LLC for the side practice, adjusts W-4 Step 4C to add $4,000 of extra annual withholding, roughly the federal income tax owed on the $20,000 of side income, files no quarterly estimateds. April comes. The combined return shows the day job withholding plus the W-4 adjustment covered both incomes within the safe harbor threshold. No underpayment penalty, no surprise check to write. Pull the last day job pay stub and the last quarter of side practice revenue. Open the W-4 Schedule C interaction worksheet in the resources for this unit. Compute the extra annual withholding amount using the worksheet's methodology. If that number is comfortable to fold into your day job paycheck, file a new W-4 with day job HR within the week. Step 4C on the form is the line that holds the extra withholding amount. If the cash flow hit is too steep, switch to quarterly estimateds and put the 4 deadlines on your calendar today. The decision is more important than the calculation method.